Traders, I'd like to welcome you to today's webinar event. My name is Sean Kozak, and I will be your host for today's Partner Arc AI product launch. For those of you that are here today, I want to thank you for your attendance. And most importantly, I hope you had a great trading day so far. If you're here to learn about order flow, you're definitely in the right place. This is going to be a cutting edge event. We've been putting this together for months now, and we're excited. This is some exciting stuff. For those of you in here, can you guys let me know, do you trade order flow? Can you let me know if you trade order flow, or if you're using order flow, or if anything of your history in trading order flow? We got some yeses, we got nos, got some maybes. No? Perfect. Excellent. Give me 1 second, traders. So the reason I'm asking this is we need to make sure you understand the purpose for order flow before we get into an event. And we're going to go over the launch. We're going to talk about all this stuff, but there's a big difference between order flow and all other types of trading. Okay. And I'm glad you guys are here for this, because I'm going to kind of pop the proverbial bubble here when it comes to order flow and break down essentially the good, the bad, and the ugly, and how we stripped away all the noise and we only focus on the most important two factors when it comes to order flow. Okay. And so what I'm going to do is let you guys know that we are recording this event. We will definitely send you guys out a recording and all that information, but let's get right into the presentation. And if you have any questions, please type them in the chat box. If you need assistance and you have to leave early, not to mention we'll be here all week, so just let us know and we can definitely help you guys. Okay. So first things first, we need to cover a disclaimer. So while you're reading that over, just take a second to understand the risks associated with the business, and that way you understand the business. And Spike, yeah, we're going to get into that. We're going to get into that. So just give a second to read that disclaimer, because when you look at the risks in this business, it's no joke, right? Money is the business, but there are risks. We can't guarantee performance. You have to treat this like a business, not a hobby. And if you are taking trades, we're not responsible for them. You got to take some ownership on your own trades, right? It's really on us to do that. And if you have any questions on legal, let us know. So we're going to go through an agenda here real quickly. We're going to get into the tail, the big fish, small fish, show me the money stuff, right? And then we're going to transition into order flow methods with regards to kind of what you're looking for. We're going to do a segue into the market maker tape trader, and then do a bunch of demos. And then we'll definitely make sure we get you guys into the draw, because we're going to be giving away a license today, which is huge. And then we'll stick around for some Q&A at the end of the event. So what I'm going to do today is I'm going to pass this over to my good friend, Mr. Jim, and I'm going to sit here until I come back into the presentation and kick things off with the demo. So Jim, take it away, brother.
Awesome. Sounds good. Am I able to, should I share my screen, or do you want to do the
I'll let you share your screen. I'll
Okay.
let you share your screen here. I'll just stop mine and you can share yours.
Yeah, perfect. Let me get this going. All right. Bear with me. I'm going to have to throw this back up because I had to hit escape, and we are good to go. All right. So let's dive right in. Can you guys see my screen okay? You guys seeing that before I get too far? I've done this in the past where I've been halfway through a presentation or something. You guys see that okay? All right, good. Perfect. All right. So the age-old tale, we've seen it 1,000 times. Odds are we see it every day. You probably saw it today. Markets coming into a significant level of resistance. Institutional traders step in. What are they going to do next? They take out the stops, they drop the market, they go find more orders, and then they rip the market back up and they take their profit. Meanwhile, they do this every day, by the way. But meanwhile, you're on the sidelines tending to your wounds because you were the one that tried to reverse and they took out your stop. And then they went down, got more orders, and brought it back up anyway. And excuse me. And so this is something that takes place every day. The problem with that is not knowing where those orders are, not knowing what the institutional traders are doing, not knowing where the volume is. And we're here to solve that problem once and for all. What we don't realize in that moment is that we are a very small fish in a very big ocean. And that ocean is filled with very big sharks. And these sharks are all too happy to eat your lunch, or maybe even eat you as lunch. And so knowledge in this case is life or death. When it comes to being a small fish facing the shark, it is literally life or death. And when it comes to trading, wouldn't you like to know where the sharks are making their money? Wouldn't you like to know where that money is so that you can go and get it? And that's what order flow does. So there's a lot of different ways to trade order flow. We've got the footprint charts, we've got the tape, we've got the dome, we've got the book maps, we've got all these different, where's the inventory, where's the orders, where's the executions, where's the big orders, where, all of it. And they're all good things, but the question is, just like with indicators, well, which indicators do I need? Well, which ones are important? Well, which ones work? Well, how do they work? Well, how do I put it into my strategy? There's a lot of different ways, and so we need to find the right way to actually trade with this stuff. And finding the right way can seem impossible. So we look at, you guys remember Where's Waldo? How many of you have done the Waldo thing as a kid growing up? I know it's been around for a while, and you got to find Waldo. But what happens when you're looking at a page full of Waldos and they're all Waldo? Well, you say, well, which Waldo am I trying to find? And that's what it's like to try to read the tape. Anybody here trade with the tape, the time and sales on your charts, or the tape, or the tickers, or whatever? Any of you, try to trade with that? It's hard. You're looking at this lineup of all these different orders. Alexandra is, I'm not sure if I'm saying that right, but is reading the tape, and that's great. It is perplexing. You see all these orders coming in and you're like, well, which ones are important? We've got one to the right there. We've got a 27. Well, that one looks pretty important. But when you're reading this in real time, God forbid you're trying to read it on NQ or something, and you've got all these orders in here trying to figure out what's going on. And it's hard because you don't know which ones are standing out. You don't know which ones to look for. It's like that same chart of Waldo. Well, if you're looking at a chart full of Waldos, which one do you need? And that's what tape reading is like, right? Which one do I need is the issue here. And I know it's this is kind of the segue into the tape trader here. Sean, are you ready to jump back in? I know that was a quick, it's more like an introductory type thing.
Well, and I think it's kind of important. I always get a kick out of Jim telling me this slide, because I remember back, how many of you guys were with me back when I used to run the trading rooms? I've been doing this a long time, right?
Mm-hmm.
And there's many of you guys in here when I was running the trade rooms. I got the Steves, the Roberts, the Gunther, the Thomas. Like, there's so many days in the back end of our trading careers. Many of you guys have been with us for such a long time, and a lot of new people in here. So welcome to the newbies. But, order flow is not a new concept. The problem is that it's not done correctly, and everybody thinks they've got the right answer. Well, if that's the case, then why is everybody struggling with it? Like, order flow is a great tool, but done correctly can change the game for you. Done incorrectly, and it's not going to do anything for you. It's going to make things harder. And so this is exactly what this slide is about, is that order flow 9 times out of 10 makes things harder for you, yet we know we need it because there's some importance in it. I just haven't seen anybody really nail it down. And even, if we look at all of the different indicators that NeuroStreet's produced and all the different indicators that other vendors have produced in the space, Order flow all kind of follows the same context. Everybody's looking at an imbalance. Everybody's looking at this. That's not necessarily the most powerful way to use order flow. And I'm here to show you the two most powerful things that we've been able to identify and how we make it obsolete compared to anything else that's out there. Okay, so give me a second, guys. I'm going to share my screen again. Okay, and we're going to get into this. Okay, we're going to go down here. We're going to find Waldo slide. And can you guys see that? Let me know if you guys can see that. I want to make sure you guys have got me good, loud and clear. Perfect. Okay. So the previous slide, everybody's looking for the dude in the red shirt right here. Okay. That's the most realistic way we could explain order flow in the most humanly basic way possible. It's complex, yet everybody says it's easy. It's not. If it was easy, everybody would be scalping it, and they can't because scalping is a difficult business. So what we're going to do is we're going to take this complicated stuff and I'm going to make it super freaking simple for you. Super, super simple. There's two things that matter in order flow more than anything else. So let me ask you guys this. What do you think order flow does for us? I remember Jim said at the beginning there was a shark slide. Okay. How many of you guys would agree with me that every day we come into our offices, we sit down in front of our little monitors in our own little world, and we say, okay, we're going to go and we're going to try to extract money from the market today. We all say it and we all do it. Okay. Well, most of us try to do it, right? Where are we trying to take money from? Who are we trying to take money from? That's the question. And where are we participating? I've used this analogy in the past, and I'm going to bring it back for those of you that have never been to an event with me. When we go to the JP Morgan's backyard for dinner, we're going to their house. They're not coming to ours. And there's no way in hell anybody's going to trade like the institutions. I'm going to explain this very simply. You're not an institution. So you shouldn't be trying to trade like them because you're not managing money like them. You're not them. So everybody says we need to trade with them and we need to beat them. No, you don't. You're never going to beat them. It's their house. It's their backyard. What in God's name would any of us retail traders do trying to step into their backyard, tell them how to run their business? Can you guys see where I'm going with this? It's impossible for retail traders to try to do what they do, and that should never be our job. Our job should not try to mimic them, mirror them, copy them, because we're trading from two separate perspectives. So if we know that we can't trade like them, then wouldn't it make sense for us to understand what they're doing? Can you guys give me a yes or no if that makes sense to you? Like if you could understand the context behind the order flow rather than just looking at the shiny object syndrome, then you could put some strategy behind it so that it actually has merit. Because order flow over the place is rendered freaking useless. But order flow tuned properly, and I'm going to get into tuning your order flow tool set because it's very different for every market. Tune your order flow tool set properly. The two most powerful things you're going to learn is where big money absorption and block trades tell you what they're doing. Okay. If you're on a neighborhood and everybody on the neighborhood has $1 million home, right? And everybody knows everybody. Everybody's got a Ferrari, everybody's got a Porsche or whatever, everybody on the block, right? But when somebody does something new that stands out, everybody on the street knows about it. It's like keeping up with the Joneses, right? You know, you're in the Pleasantville. Everybody knows everybody, right? That's how I want you guys to think like an order flow trader. I want you to kind of pretend you're in their backyard. And when they do something, it's your cue to say, oh, look, Johnny over there is doing that. That's pretty important. Okay. And I'm going to teach you how to do this. So what you're seeing here on the chart is the backyard of the institution. And what we've designed is we've designed 2 identifiers to identify big money absorption and block trading methodologies mapped into your tool set. That's it. That's all. We're not looking at print. We're not looking at any of that deltas and cumulative this. And if you're doing what everybody else is doing, I can assure you, you're not getting where you want to be. Okay. And that's why we designed this way. We spend a lot of time on the back end fill algorithms, because what we're going to do is we're going to also change the way traders look at order flow. So a couple things I want to do here is MMTC stands for market maker tape trader. So for those of you that know, we've got a product called the Print Profiler. How many of you guys are familiar with the Print Profiler under NeuroStreet's company? It is the #1 product sold in our entire business, 75 indicators strong, and that is the #1 tool sold across the masses. Why? Because everybody knows order flow is important. They just don't know how to make sense of it. Now, here's what I'm going to do. I'm going to take this to the next level. The market maker tape trader is a much more accurate way to read order flow than the Print Profiler. And I'm going to tell you why. Because the market maker tape trader is true bid and ask data. We didn't build this using uptick, downtick distribution ratios like every other product out there, because it's not meant for that. We are literally pulling pure bid and ask data. It is the most accurate form of order flow analysis that you can actually leverage. And it is only meant for real-time trading. It is not meant for visual back testing. It is not meant for loading and going back and testing. It is literally meant for real-time day-to-day execution. And the reason I'm saying this is that every day the market is different. So if you use order flow software and you set it to yesterday or the day before or the week before settings, guess what? That was last week. What's happening now is more important than what was happening last week. And I'm going to explain why this is critical, because if you're an S&P trader, you're going to need to know how to set the software to read the S&P current order flow data for today, not for last week or yesterday, because the settings are different. The order flow impact is different right now as compared to last week or yesterday, which is what nobody knows about order flow. In fact, everybody out there that I've ever seen, even the good traders that are using order flow to some advantages, aren't even doing it the best way they could be. And so if you're at all an order flow trader, I'm going to rock your socks today, because the key here is to show you how to tune your engine so that you can truly get the most out of your machine. Okay. So we're going to basically identify the details in the tape using true bid and ask data. And then what we're going to do is I'm going to show you how to set the software so that it can pull data based off of the actual trading climates that the software is able to depict in the tape. So it doesn't matter who you are, if you're a minute trader, a Renko trader, volume bars, tick bars, range bars, it don't matter, because order flow is order flow is order flow. What do you think the difference is between all of these? If order flow is the constant, and irregardless of the bar types that you are using, what do you think the difference is? Like if, say, you got 5 traders and every one of you is using a different bar type and a different time frame. Order flow is the constant. We know where we need to use it. What do you think is the difference? Anybody with me? Give me a guess. Even if you're wrong, I don't care. Traders, Lisa said it, right. One person might be trading crude oil. The other person might be trading the S&P. One trader might be trading gold, right? So the difference is every trader is going to need to set the software to read the market that they're trading, because every market trades differently. So you cannot rely on order flow set to the S&P to be the same as order flow set to another market. They're completely two different asset classes. And what we've built is an internal engine to tell us how to set the software properly based off of the data that we're scraping from the bid and ask. And that's what's really sophisticated. This is cutting edge stuff, guys. And it's a statistical method to order flow. It's a statistical method which allows you to not only take technical analysis, but we couple it with a fundamental component. So do you notice how a lot of traders that have fundamental analysis in their investment thesis, like investors who rely on fundamental data, they have a different edge than technical traders? Well, we've been able to take order flow and bridge it with technical and fundamental analysis. How many of you guys think this is kind of exciting just to know this? And we're going to show you what this is, and we're going to get into this, and I'm going to give you the breakdown. How many of you guys are interested in learning how this works? It's a true edge, Bradley. Yes. Okay. So let's get into this. So I want to talk about 2 ways to trade using the software. I'll get into how to set it up. I want to talk about 2 things. Give me 1 second here. Okay, can you guys, let me just see here. Can you guys see my cursor here? I put a little spotlight so you guys can see it. Can you guys see that? You got that? Little fancy stuff. I'm doing an enhanced presentation today. Imagine that. Only write algorithms for financial market platforms. Can't figure out how to use a draw tool. So the first thing I want to do is talk about block trades. Everybody thinks block trades, you're like, yeah, I've heard of block trades before. That's fine. But a block trade on the S&P is far different than a block trade on gold. So what we're going to do is we're going to identify the fundamentals on every independent market so that we can set the software to depict the correct block sizes for each market that you're trading. And whenever we get a block of orders that are coming inside the tape, we're going to plot a diamond. Now, this diamond is critical information because it tells us that there's above average orders coming in at those price levels, but that doesn't mean you should just go and buy. And that doesn't mean you should just go and sell. What that means is that, hey, something's going on in Johnny's backyard. Maybe it's important. We should take a look at it. Right? Remember I said, pretend you're on the Joneses street and everybody knows everybody. And when somebody does something, it stands out. A block trade is standing out, but that doesn't necessarily mean you should go and do something about it. Right? Now, you're going to see block trades happen at reversal points. You're going to see block trades happen at pullbacks. You're going to see block trades happen all over the place. Okay. Now, the other side is absorption. And absorption is another way of discussing big money. Big money that is basically leaving a track record of the amount of impact that they've had in the market. Absorption will normally happen that will stop price. If the market is going up, and then all of a sudden it stops, it's because it's being met and absorbed with either liquidating orders on the other side or larger orders from the opposing force. Okay. And so what absorption does, well, Scott's asking a great question. And Scott, you've nailed it, because What you're asking is the exact reason why we've designed the software the way we have to answer that. Scott's asking, how do you qualify a block trade size? 100 lots, 50 lots, 200? And the answer is none of that's accurate. None of that is actually correct. And I'm going to explain why. Now, before I get into the details to answer Scott's question, I want to kind of end with absorption is a level dictator. Absorption is a level dictator, and block trades is an impact dictator, meaning block will kind of tell you, hey, something significant just happened at that price point, but absorption is going to tell us that this is an existing area. Okay. And actually, no, Thomas, because that's not bid and ask data. It's not as accurate, and it's a completely different algorithm. Yeah. So it's done differently. Yeah, way different on the back end. Similar concept, but much more accurate here. Yeah. So what I'm going to do is I'm going to get into confluence. Okay. So I want to talk a little bit about trades. We'll get into talking about how to set it up. But what I want to do is I want to look at areas where I've got absorption coming in from the big money that's combined with block trades. Whenever I have the ability to see big absorption coming in with block trades, you're normally going to get significant reactions from these areas. Okay, now this is just an example, but I want to show you specifically today where this happened, and you can actually see why this could give you the information that you need to understand how the market's going to react before it does what it does. Okay, and give an example of an area of confluence. If you've got confluence, let's say high volume nodes or low volume nodes, you can see low volume nodes coming across with a level of absorption that just stops the market. Okay. You can see areas where the market is giving you information in, say, profile charts, but the MMTT will tell you where inside those nodes that the most important significant area is going to be located. Okay. Now, I'm going to just keep showing you examples of different concepts. Let's say you have an area where the market gives you an impulse, pushes through, right? You can see this, you know, a pullback trade where you get impulse, pullback to areas where absorption and block trades line up. That's pretty significant information for pullback traders or anybody that's in a trend trade. Absorption is, well, there's two things. Great question, Ingrid. Absorption is, you know, either large imbalances of orders on one side of the tape or the other, or what it means is that you're being met with an opposing side of order flow. It just depends on the area. Because let's say if you're getting absorption at a pivot point versus absorption in the middle of an impulse, two different concepts. Okay. You could have a level of support coming across here and it takes it out, and that stop loss is being hit. And those stop losses being hit triggers more absorption in the market, right? It just depends on the area. Now, here's another example of levels reactions. And this is actually one of my favorite ways to trade the software. I'm going to talk about why. Okay. I'm going to talk about how, and I'm going to show you real examples that took place today with information that can be very, very repeatable. If you're looking at a very, very fast way to take this and rock it, this is the trade setup that I think will be a go-to for everybody. You got a level of resistance coming across here. You can see this level of resistance comes across like this. I'm going to draw, give me 1 second. I'm going to draw instead. One second. So let's say we got resistance coming across here like that. I'm going to change that. My apologies. So let's say you got a level of resistance coming across like this, okay? And then you can see that there's absorption coming across like this right at the top. So that's a level of resistance, right? When you break out from these areas, that's the breakout. That's a significant area. right? A breakout or a level of support or resistance or a low volume node or a supplier demand zone, whatever the case may be, okay? What's happening, okay, is when you get an opportunity to see this being broken and it's being met with absorption and block trades from the other side, that's important information. Because that doesn't mean the stop losses are being hit here, because a lot of times you get false breakouts or you'll get, you know, levels of support or resistance that will trigger, and you'll normally, what'll happen is sometimes price will come up and then everybody thinks the breakout's happening and then it sucks back into the range, right? Unlike most traders, what this software is going to do for you is it's going to tell you that indeed that was a breakout. Take a look at the new data that's coming in from the buyers on that side, which is normally going to be stops being hit. So when you see this level here, that's not intent. That doesn't mean that buyers are stepping into the market. That means that most of that buy absorption is being stops being triggered, where your stop losses are being hit, okay? And you're either doing a sell stop or a buy stop, depending on the side of the market that you're on, which is going to cause absorption. But that doesn't mean that the market is going to go up and continue up from that breakout. But our software is going to tell you that it is. And what that means is as soon as it breaks and it's being met with absorption and block trades after it takes place, what that means is that is truly buyers pushing the market through, being met with data, which means, hey, Johnny down the street just bought a new Porsche, right? Pretty important. And then you're saying, well, I want to go take a test drive with Johnny because I want to get a Porsche, right? Like you're drinking the Kool-Aid, so to speak, right? And what this means is when the market surges up, this is your buy setup. This is the key to get into the market, because that's where the buyers are proving that they're interested in taking out the ceiling. And that's your setup. These are really, really powerful trades. It happened today on the S&P as it tested the point of control. I'm going to show it to you, and we're going to show you examples. And then I'm going to get Jim to show you his trades, because he's got some stellar trades. His results speak for themselves. But does everybody kind of understand this? Like, I wanted to use basic introductory stuff here to show you how simple that information can be. There's obviously many other ways you can use order flow and how you could take this data. But did everybody understand that? Give me a yes if that makes sense to you. I think so. We good? Anybody here? You guys are good? Perfect. Excellent. So let's go in and take a look at some examples. Okay, gotta get it here. Okay, give me a second, traders. We're gonna do this, and I'm gonna move this over here. I'm gonna move this across. Okay, can everybody see this? Now, what I'm gonna do is I'm gonna show you the most important part of the software. Okay, the most important part of the software is that we need to tune it. We need to tune this software to be specifically to each market. So I've got the S&P, I've got crude oil, I've got gold, I've got the NASDAQ. Does everybody see that? So what we're going to do is we're going to open up the S&P for a second. Okay. Now you're going to see absorption levels. You're going to see block trades all over the place, right? Thomas, you're going to need to give me a second here so I can teach this, and then I can answer your questions. Okay, guys? So a couple things I'm going to go through here is we can go through and we can basically pause the tape. If you're ever interested in looking at the data and you're saying, holy man, something's coming through here, like boom, I can just pause the tape. If I want, this is more from a learning perspective. It's not necessarily a trading application perspective, but it's nice right there. I can pause the tape. Take a look at that absorption. 206 blocks coming in on that absorption level, right? That's a significant amount of information. Maybe it is, maybe it isn't. This is the S&P. It might just be crumbs on the S&P, where if you had if you had an order like this 206 over here in gold, Goldman Sachs can probably call you and say, what the hell are you doing? Moving the market around, right? Like it's not the same game. And that's exactly why I want to basically show you why this is important. We have to go into these two settings. And right now, the absorption levels that are dictating the software, right now, the average order size hitting the tape for the S&P is about 182 contracts on the bid and 172 contracts on the ask. And what this means is anything less than that is you don't even exist. You're not even important. Can you imagine putting in 182 contracts into the S&P? Like, how many of you guys have ever traded a 200 lot of the S&P? This is a full-size contract, not a micro. Anybody here ever taken a 200 lot before? Yes or no? in sim, yeah, just to see how well it would make you sweat. Okay. Well, I'm here to tell you that that is the benchmark order size of the banks right now for the S&P. Now, you might come in tomorrow and it's 120. You might come in next week and it's 260. Do you guys see where I'm going with this? You cannot just load the print profiler or any other order flow software out there that does not have an algorithm to tell you how to tune your engine every time you start it. Guys, I know everybody wants order flow to just be a constant. It's not. It will never be a constant. This is the big aha moment, is that if you're using order flow software, even ours, okay, you have to be able to understand what this market's telling you in order to make sure that the data, okay, is critical. Now, I've tuned this. I've had this running since this morning, and there's a reason for this. This is not something where you're going to go and load a bunch of days on. This software is pulling bid and ask data. And if you want to see historical information, you need to load tick replay. So you're not going to use historical data with large lookbacks. You can load a minute chart or a Renko chart or a larger time frame, but if you're going to do that, you need to disengage tick replay so that it only runs in real time. I have it loaded for historical purposes only for the event because I want to show you the trade setups that took place today. But I would never load this past half of a day. There's no point. The order flow changes almost every hour or two. And this is the edge. This is the fundamental edge that everybody's been waiting for, and I haven't seen anybody nail the hammer properly. Okay, so what I'm going to do is I'm going to go into the settings for a second. And I'm going to go in, and we know that if I look at the absorption setting, okay, first of all, we're pulling 50 bars back. So the software has to have at least 50. You can set this to whatever you want, but I'm loading a 50 bar look back because 50 bars is adequate data for me to understand the tape. Okay. And what I've done is I know that on average, the average order size block is set to 175, 164. So I'm going to just keep it about 175. See how it changes every bar? It changes every bar because every bar updates and the order flow in the tape is different. So the historical information changes. But I'm going to use a benchmark of, let's say, maybe 200. So I want to see stuff that's above average. Okay. And then what I'm looking to do is so basically what that means is my absorption will not happen if it's nothing greater than what everybody else is doing, which means the absorption. And you're going to see that I've got major clusters here. I can even suggest that you could make it even larger. So instead of doing 200, you could do 250 to make it very significant, and you'll have less lines in here. You'll have a little less lines. You won't have as much cluster. You'll have more specific price points. To me, I did this on purpose to show you the areas of impact that are critical. Okay. And for blocks, right now, the average block trade that are hitting every single price point, most institutions are going in with blocks of 25 lots at a time. So this means that if you're setting your block, this goes back to the question that was asked earlier. Let me see by, give me 1 second. Let me see the question. By Scott. Scott says, how are you qualifying block trades 200, 150? Well, right now the S&P is telling me to qualify them based off of 25. So what we're doing is we're looking at above average block size, the top half a percentile in the tape. So we're basically looking for the outliers. And what that means is that if you have anything under 25, it's not even you're gonna just have block trades everywhere. So what I would do is I would go in and I would set the block trades to a minimum of 25. You could even increase this to say 30, 40, 50, whatever you choose, right? And the reason it's at 25 is because it's the baseline minimum for a block trade to fire for me so that I could demonstrate a concept, okay? Now, I'm going to show you a great example of the money trade that I was explaining earlier. Okay. Let's say I'm coming in here and I know that this is just one example of how you can trade. I'm going to show you many different examples, and then, you know, Jim's going to come in here and he's going to show you some other great examples, but I've got a significant level of support here. Pivot point low, pivot point low. It's a pretty significant level of order flow that stopped the market. And then off the low, we had a huge amount of absorption step in on the higher low retest. You can see that. You can see that this was the low. This was the higher high. This was the lower low that was testing the low. As soon as that absorption came in, guess what happened? As soon as they tested that low with the absorption, you can see what happened. But I'm not necessarily looking at that. That's a different trade in and of itself, okay? I'm waiting for them to bust this floor and trigger the stops, because this is a very, very sneaky way to see the intent of the big boys. If the big boys are just trying to run stops, they're going to run the stops in here, and then it'll just shoot back up. But if the big boys are indeed trying to take out the floor and drop the market, it's going to be met with opposing levels of influence on absorption, followed by block trades. Okay. It's going to be met with opposing orders, followed by block trades. So let me just kind of go bar by bar. I like doing bar by bar analysis. 1, 2, there's some, see what's happening here? They're taking out the stops. Do you see what took place right here when they took out the stops? It was met with the absorption and block trades on the opposing side. So when the market comes back up to retest, okay, right into that area, it drops like a rock. Does everybody see this? Now, if we increase the block size, it'll probably remove some of that noise. I'm just using this as a concept. This is the level. That's the key. Here's another example. Here's another example. We're going to show you another example here. Let me just try and find you some key stuff here. I want to go over to the point of control, and I want to show you what took place. Here's the S&P today. I'm using the S&P because everybody knows it. Okay. So today, when the S&P hit here at this price level, I'm going to draw a little box around this. Okay. Pretty critical area, volume shifted a bit. Okay. And you can see that this is also a pretty critical area. High volume levels right in here. Pretty significant locations. Okay. I want to paint the story using the tape properly so that you can understand what's taken place. Now, I think right now, based off of the settings, that it might be a little bit noisy because I need to increase the thresholds a little bit, which is fine. We can do that. But I want to paint a picture here. I just want to come down on the retest of that point of control. This was the retest of the point of control right in here. So when the market came down, this is the POC on the 30-minute time frame. Now, you might not be trading this Renko size. You might be using something else. I'm going to demonstrate the concept. When the market comes down into this level, you notice how I have so many clusters? It's because I can set my absorption to be bigger. I can set my absorption to be 250 and it'll be much less noise. But I want to show you what's happening here inside that POC. You see how this absorption is lifting with block trades out of here? That is major, major data that the POC is holding. When you have buyers holding the lows, and then it's followed with major, major absorption and block trades on a double test of the lows, that's a massive sign of major, major buyers stepping into the market. Okay. And then here's the critical part. When they come back down to retest, where are they testing? Where the absorption was with the block trades. Now watch what happens on the retest. Boom. Now this is just one little example. Let me give you an example of how this works where we can clean up the noise, okay? I'm going to show you some examples of optimizing the software. We'll go take a look at some other markets, and we're going to get Jim in here and share some of the things that he's done. But what I'd like to do is I'd like to just kind of come in and let's go to data series. Let's turn off tick replay for a second, and let's just load this like this. Okay, and let's go in, and you're gonna see here that now I've got no orders running. And what's going to happen is we're going to actually be able to see the data coming in here off of when it happens in real time only. So you don't need to load it with a tick replay and all that. You're going to see there's some block trades coming in. But what I'm going to do is I'm going to show you that we can go in and say, you see how it's got no data? It's because it needs a certain amount of data to feed your analysis. Okay. And so what I'm going to do is I'm going to load tick replay to show you I got 50 bars loaded. Okay. And we're going to go in and we're going to just go into the indicator settings. And actually, let's go in here to data series. Second here. Excuse me. One second, Mr. Jim Simmons.
While we're doing that, Mike had a good question. Can't you just configure time and sales to show order above certain size? And yes, you could technically, probably, but the problem is, look at how fast that tape is moving on the left. And you're going to see one little price action thing in there. Wouldn't you rather see it on the chart? And that's what this is doing. It's putting it on the chart for you so you could see it. And then you can line it up with other stuff too.
And Mike, actually you can't, because just because you can tell the you could tell the block to look for orders set to 50 or 100 or 200. How do you know that that's the right setting? You don't know what you're supposed to set those blocks to, because we have an algorithm reading the tape that's actually checking every single block trade that's come through, every single order that's coming through, above average, below average, so that we can tell you how to set the time. You could actually use our software to help you reconfigure the tape as well. But just taking a rudimentary, I'm going to wait for 100 lot or wait for a 50 lot, that's not accurate. That's just completely throwing darts at the board. Because right now, if I go in and I take the data series and I turn tick replay on and I go in and we load this, let's take a load and it's going to load this tick replay for a second. It's going to calculate the last 50 bars and it's going to basically tell us, how to set your block trades 26. Anything above 26 is significant. You can even double down and put 50 or 40 or 35. Absorption is 150. So let's go in and take a look and let's configure the block trades to say, let's put it at 40 and let's put this at 250. Okay. Well, Scott, and this is something you want to keep an eye. Like if you're trading 15 markets, it might be a bit cumbersome because obviously you're looking at many markets. But if you're like trading normally, like most people are trading 3 or 4 futures contracts at a time, I would just check every half an hour or an hour and say, hey, is my blockchain, as the size restrictions change that much, right? You'll notice that the changes will happen mainly on high volume to low volume days. Sometimes the S&P is trading large volume, sometimes it's not. So those are the days where you'll need to really understand that. Yeah, so the MMT automatically gives us the actual ways to set it, Leah. Absolutely. It'll tell you what the institution's order flow sizes are for that moment in time over the past 50 bars. You can set it to 100 bars or 10 bars. I normally set it to 50 or more because I want to see a pretty good baseline of the big boys on how big their order books are. Right? And it could depend on time of day, Lance. Yes, it could. So I'll give you an example. Let's set this up and we're going to set this to a little bit larger settings. There's no guesswork, Bradley. This tells us everything. So Spike, great question. The print profiler is using uptick, downtick. It has to because of the way that it loads custom graphics and the way that it loads historical bars. Like when you're putting order flow into the bars and you're putting imbalances and all that, you can't use bid and ask or it'll never load. This is meant for bid and ask. This is truly the most accurate form of order flow data that is ever created. It's what the heat maps, the book maps, all the order flow platforms that are using are meant for. Right now, you can see the noise is reduced drastically. Right, you can see that. Well, it's only computer intensive if you're loading large lookbacks using tick replay, Lisa. So what I would normally do, and this is something that you can use on your market, but if I know that over the past 50 bars, the absorption is like 150, the block is like 27. If I know that, then what I can do is I can go in and I can actually turn my tick replay off. I could go in and actually do that and just set the settings up and then just turn tick replay off and let it run in real time. But I technically like to at least have tick replay running on 50 bars or more so that it gives me enough data. Does that make sense? Now, if we go and take a look at, say, the NASDAQ. Okay, we can go take a look at the NASDAQ. This is an amazing example of what I was talking about. Huge example. I'm going to show it on both sides. This is my favorite way to trade because it's very easy to see this. But Jim's got his own setup and he can show you his setup in a second. But I want to kind of show you a couple things right here. This was a level of resistance broken, but there was no block trades here. Do you see that? There's no block trades. There's no absorption in here. Block trades came up here, but there's no absorption. You'll see here there was some absorption in block trades. And when they came back to retest it, bingo, there's a pullback trade. Okay. But you notice here how this break of resistance had no follow through. They're running stops. Maybe this is, 6:30, 8:30, maybe news today. I'm not sure what time news was. I think it was news. But the whole point is that when they came back down to test it, there was no love from above. You see that? And just blew right through. Now, when we blow right through, what happened? Right as soon as we blew right through, block trade met with absorption. You see this? And this is exactly what I'm looking for. These are kill shots, man. Like, this is not a joke. This is seriously, this is intent. Okay. Now, watch what happens. As soon as we bust this, look at that block trade. You see this right here? That's what I'm looking for. I'm looking for alignment. I'm looking for confluence. This is the bullseye. This is the bullseye right here. Right here. They're triggering the stops with follow through. And when they come through, watch what happens when they come right back down to that level. Wait for it. Wait for it. Boom. Now, you don't need big stops here. This is a scalper's paradise. This is not some big swing trader's dream. This is a scalping tool. This is a day trading, timing, key areas of interest tool. Okay. Now watch what happens. We bust through. What are you seeing right here? Block trades triggering through. Massive absorption. As soon as we get back up to this area, and bar settings are irrelevant. Leah, you could set this to any time frame. It's going to do the same thing. We're going to wait for market to get back up there. Wait for it. Now, what are we seeing here? Block trade and absorption taking out the floor. Ingrid, great question. I only take them at key areas on failed levels of support and resistance. That's my way of trading. Jim's got some on pivot points, which he's been trading very well. Okay. Take a look at that reaction off of this is my trade. This is called the levels reset or the levels retest with it's a confluence signal here. And this is taking out key levels. It's a confluence signal here. Key levels. So there would be the entry here. There would be the entry here. These are key clues in the market that are, I mean, even if you really want to get down to like the fine nailing it to the tick, like take a look at this. If you draw a little level of support from here to here, what did they do when they took out that level of support right here? They left an absorption level with a block trade showing us that they took out the floor with intent. This is not just running stops. So this is literally to the tick levels of, I mean, you would want to front run by a tick. So where would you put your order? I'll just show you exactly where you put your order. One tick in front of it. Guys, this is a scalper's paradise, but I wouldn't put my order here and I wouldn't put my order here. There's no edge to that. I'm looking for a few things and I'm going to kind of bring this home and then I'm going to let Jim kind of talk a little bit about how he's been trading with it. Okay. So let me just give you my mini concept. I'm going to teach you two things and everybody knows these two things. And then I'm going to show you how to use the market maker tape trader to drastically change this for you. You got two concepts, not with yellow, that'll kill a man. Resistance. Broken resistance. What I want to see is I want to see diamonds met with absorption on the breakout. What I want to see diamonds met with absorption on the breakout. That's the trade. That's the trade. If you do not have the confluence of block trades and absorption on key level breaks, give you an example. You're in a range. Okay. You've got resistance. You've got support. If it took out the floor and it left diamonds with absorption, that's not telling you it's a fake out, and that's not telling you it's a stop run. That's telling you they're getting ready to drop the market. And when they come back for the retest, that's your entry. If they were to drive it through, boom, and there's a diamond here, and there's absorption levels, you better put a pending order right on the back test of that because they're coming down to fill those leftover orders and they're getting ready to rip that market. That's what the big guys are telling you at key levels. Now that's the diamond in the rough trade. There's other ways to trade this, trust me. But what do I know? I only built it. Okay. I'm trying to tell you how to take a setup. Every morning, all you need to do is two things, or maybe there's three. Give me a second. One, pick your market. Let's say you're like most people, you're trading an index market, an energy market, and a metals market. Okay. Just giving you an example. Okay. Two, set your absorption and block size. Mark key areas of interest. Wait for the break of the AOI. Use the diamond plus levels to set your order. Okay, this is Sean's diamond in the rough trade. Guys, it's the easiest setup to identify, okay? Like it's like taking candy from a baby. This setup is taking candy from a baby. Okay. So all you need to do is map out key levels, map out key areas. Give me a market like crude oil today. Let's go see if did crude oil give us anything? Did crude oil give us anything of love here? Let's take a look. Let's take a look at crude. So here's an example of, I don't see a lot. This could just be my settings, but okay. I don't like manufacturing trades. So if I don't see a key area, what I would need to see, I'll give you an example. What I would need to see, I can tell you right now that we're in a range, right? We're in a range right here. This is a key level. See? Key area. What I'd be waiting for is I'd be waiting for them to break this down. Boom. And I'd be really, really interested to see if I get a diamond and absorption on the other side of that, because that'll be the key for me to get back into that market right here. That'll be the killer, because right now they're building a position. This is the institutions building a position. You see what they're doing? They're building orders in here. That's big boys keeping it in here. Why? Because they're building size to do what? To either mark it up or mark it down. And you know the best part about using the market maker tape trader is you can set your levels like this across the side and just wait for whichever side they show you they're going to rip it, and make sure on the breakout it's met with the diamond in the rough. And then you know that it's not just running stops to them to keep it in the range, it's truly follow through for the next leg up or down. Okay, give me, I mean, there's other setups, trust me, there's other setups. Let's go take a look at gold for a second. Here's a great example. A great example. Okay, here's a great example. Now you can change the size of your bars and you can change all, but would you say that this is 1, 2, 3? It's a prior head and shoulders, right? It's a key level of resistance. Would you guys agree with me that's a key level of resistance? Right here. And when they broke it, right there, when they broke it, they took out the highs. Everybody wants to know, is this a breakout of the highs? Everybody, I don't care who you are, if you're on the hard right edge, you're wondering, are they going to rip it back down? Or are they going to take out the highs and create new flow? Can you agree with me that's an honest, fair statement? Everybody wants to know. Because a lot of people are placing their stop losses above that. A lot of people are fading it. A lot of people want to know that. Now, guess what? You don't need to guess. Because if it was just a stop run, there'd be no big order stacked with absorption there. It would just be a high tick. It would be a rip through and a push down. Okay. What is it? Now, I'm not entering anything. I'm going to put my order. 1 tick in front of that level. You can do 2 ticks if you really want to. And where could you put your stop loss? You could literally put it on the other side of this order flow down here. You can see this. So if we wanted to get right into this, let's grab the risk and reward tool. You can do that here. Let's wait for it. There's the entry. You could do it a little bigger. It depends on your size. You could do that. You could wait for a bar reversal. Depends on how you choose. Right? It depends on how you want to do that, right? It depends on the size of the bar, where you want to place your stop. If you want to do it that tight, I would put my entry in here and I would wait for maybe a bar flip. Just depends on the size of your bar. Okay. There's a bounce trade right there. Okay, now let's go through and take a look at another level. I want to go find another key area here. Give me a second, guys. Now I got to set the gold trade, the settings. There it is. Let's take a look here. So this is a great example of a key area. Just kind of understanding where it is. If it breaks through this, I want to see a diamond here, followed by absorption. This is just the simplest way. Jim, you still there, brother?
I'm here.
Okay. So how long have you been trading this before we got prepped for the event?
It's been a couple weeks.
Okay. And you've been doing all right?
Yeah, I've been doing pretty well with it. When I don't try to look at shiny objects, I do I do great. I see other trades and I'm like, oh, look, a trade ahead. But trading with this has been really great. Of the trades that I've taken with it, I'm at about 75%, 75% win rate at 1-to-1. So it's been good.
We want to share your screen and show some of the traders the trades you're taking.
Yeah, absolutely. Let me share my screen.
Well, before we do that, did you guys learn something from what I was sharing with you? Like, I might have to set gold to be a different setting. It's at 15 and 16, and maybe I got to set my blocks to different than 10. Leah says, once again, how do we determine the setting for each instrument? You just go to the drop down and it tells you. It tells you right now that the S&P is at 131 and 138, so 130. Okay. And yeah, so basically you can basically set this to be above 130 and it'll be above average. Okay. And then ultimately, if you go into the blocks, if you set it above 23, you're going to be above average. So it just tells you what to go and set it to. This is the fundamental drop down that teaches you how to load it. Okay. And then you can just set it. Okay. Excellent.
Perfect.
So Jim,
Are you
I'm going
able
to give
to,
you, yeah, I'll give you that.
Okay,
yeah.
perfect. Yep. There we go. With regard to wins, losses, percentages, things like that, look, I'll be straightforward. I've been trading order flow for 2 years and it's my go-to setup. So for me, this tool is like, it's like giving candy to a 5-year-old. It's like, of course they're going to take it. They know what they eat a lot of candy, but they like this candy better. That's a terrible example, but that's how I can describe it. Okay. For me anyway, that's what it's been like. Can you guys see my screen? Okay.
Yep.
All right, perfect. So, when it comes to wins, losses, there's a lot of different ways to trade this. There's a lot of different instruments to trade. So, you got to get used to it like anything else. You got to trade it. Like Sean said, it's a live tool. You got to get your hands on it and use it. So I'm going to answer a couple other questions here, and then we'll go through some examples. Please don't hate me for the colors of my chart. This is what I was trading today, and I didn't want to have to reload the charts just to make sure I didn't crash or something weird happens. And so I just left it. So please bear with me on my colors. So are there any particular times of day where the tool is most applicable? Order flow is order flow. Orders are always coming into the market. Now, after market open, naturally, the market's going to be busier. There's going to be more orders coming in. And so there's going to be that difference between pre-market, post-market, afternoon. Those are going to be a little bit different. And so going back to kind of the settings of, these tools and on the absorption, 9 is going to be different. I'm on RTY, by the way. 9 is going to be different right now than it was this morning. This morning, it might have been 15, 20, even higher. And so, and as we get to close, it'll go up. So you got to, just keep a look at it. If you see that you're getting too many signals, not enough signals, that's when you know you need to maybe look at the numbers and redefine them. Buyer and seller imbalances mean that buyers are aggressively going to, and I don't want to get too into the depths of the order flow, but buying imbalance means that the buyers are aggressively going to the ask price or above to do business, meaning they're moving, they're not putting limit orders in, they're aggressively chasing the market orders. Okay, so just to answer that. And then absorption is it's a large flow of orders coming into the market to absorb at a specific level. You can look at it as really it's a lot of limit orders. And so that's a good way to look at it too.
Jim, one thing I want to add and give you guys some context that what we're going to be doing with this software is, like, today is the launch event for it, but like any tool, we really want to drive home the most efficient way to get set up and do this and make sure you understand it. So Jim's going to be hosting an AMA tomorrow because he's an order flow trader, right? Like, out of all the people that I know, Jim is probably the most active order flow trader that I have in the company, and who uses this very, very efficiently. And so he's going to be doing an AMA tomorrow, specifically on order flow trading this for everybody that's getting involved with this, because we want to set, first of all, we want to give you his settings, and we want to make sure that you understand how we set the market up for the proper setups that he's trading, right? And so for those of you that have questions or after today, just rest assured that if you're interested in using the tool with order flow, we're going to be doing an event tomorrow for everybody that is a part of it. Perfect.
Yep, exactly. And we'll answer some of the questions. I'll answer real quickly. Graham's question is Bookmap is inventory. So it's showing what orders are pending. This is showing executed orders. And so that is the difference there. Think of it as somebody's bidding versus somebody actually completed a contract. So let's take a look at some orders. So I've got some orders pointed out here, and I'm just going to kind of show you them, and then we're going to go through the rules here. But we're coming up to a higher high in price. And now I know some of you may not have the VML tool or the waves and stuff like that. So one of the requirements is either showing divergence in VML, which we can see right here. We have a lower high in momentum, higher highs in price, so we have divergence, or at an area of interest. Now, an area of interest for you could be Fibonacci's, could be, a low volume node, high volume node, POC, whatever, supply demand, whatever you're using as an AOI. Price comes into that level, and we have divergence setting up. And then what happens up here at the highs is we've got absorption. Now, here's the number one rule to trading with order flow. You don't trade the order flow, you trade the reaction. Just because the orders are coming in doesn't mean squat. We know that there's a big order, we know that there's absorption, but what happens next? That is the intent. That's what we need to know so that we're on the right side of the trade, because you could look at this and say, oh, well, price is going up, everything's going up, it's a huge rally. And you might look at me and say, why the hell are you trading a reversal? But that's just kind of how I am. I'm kind of crazy sometimes, right? But that's the thing, is when you know the reaction, you see the catalyst, you see the reaction, you take the trade. Those are the rules. Okay, so you have to have a reaction. So we come into the level, structure is up because we're putting in higher highs. So that means structure's up. And we're getting absorption followed by a reaction, a bearish candle close. That's it. Take the order, 20 to 25 ticks. Okay. I'm going to show you reversals first, and then we're going to come back and look at continuations. All right, here's another one. Coming into a lower low, we have a reaction here, absorption and a block trade. I would not take this order. And you say, well, why? It matches all the rules. It's at an area of interest. You've got that. Do I have divergence? No. The other problem is it's over. There's a lot of momentum going into those lows. And we broke out the lows here. So I'm not interested in this particular trade. I would exclude this one because we have so much momentum going the other way. Now I use VML. I use it every day. I know a lot of you have our software and tools for NeuroStreet. So
And just to kind of add to that, if you're not using, say, the VML, I'm sure anybody in here has oscillators, stochastics, RSIs, MACDs, anything that you can measure momentum divergence will do the same thing.
MFI will work too. Absolutely. MFI is probably a really good one too. Look at all this absorption coming in. You can tell we're getting to the end of the day, right? So here's the thing. So I did not take this order. I would look for the order here because it's a second test coming into that level. But now what do we have at the lows? Well, we have divergence stepping in and we've got more absorption. Let me get rid of this so you can see it. Bear with me. There it is. You see the absorption coming into the low, and we had absorption there already from a previous support level. So we've got that helping us out here as well. And there again, there's a quick trade for 20 to 25 ticks. Now, I wanted to show one here because this is Sean's concept. It looks a little bit different here. We're breaking a level, coming into a level, previous absorption, going the other way. And then lo and behold, when we come back to that level, we've got a trade. So just wanted to point that one out because it goes along with what Sean was saying.
Now, the reason I'll kind of add to that, the reason I like to see the confluence between the absorption and the block trades is because I sometimes have a hard time with emotions. Like, can anybody in here tell me, do you ever struggle with emotion? Like, just be honest, like, just give me a yes. Does anybody here ever struggle with emotions sometimes? Like maybe a little bit of fear, maybe a little bit of rough around the edges, that, you're really confident getting into the market. And as soon as you get in, you're like, holy shit. Like now you get all this feeling and all this, the little monkey on your back. And I like to have that extra confirmation for me. I really like it. Some traders are more aggressive and, it just depends on your style, but I prefer to have everything lining up than only a little bit, which is why I have the two for myself.
Yep. Perfect. Here's another reversal, divergence at the lows, big absorption. And then there's the reaction. We're not going to just trade it just because we have absorption. We get a reaction, candles going the other way. And there's our trade again. I'm just taking 20 to 25 ticks out of the market. This is another reversal. Now you got to be cautious if you're using the same level twice, because the market will keep you honest if you get a little too greedy. But this one works at the lows. Again, we've got divergence way higher on the momentum. There's the absorption at a previous absorption level 2. There's the trade. And if you want to get away with doing a third reversal.
So I'll answer Leah's
another
question, Jim. I think Leah, maybe a few people are confused about the difference between block trades and absorption.
Sure.
Absorption is not the yellow diamonds. Absorptions are the lines going across. So the difference is the levels of support and resistance versus the diamonds. The diamonds are the block trades. The absorptions are the levels. So the absorption is big money coming in and at an area of interest. And the block trades is above average order size coming in at the exact same time. Yep. So if you can line up levels where you've got two of them together, it's like the cherry. It really is the cherry.
Here's another one. And you can look at this and say, well, there's absorption here. Let's take a reversal. Slow down. It's not at a major key level. It's in the middle of chop and you have no divergence. So wait for the divergence here. There it is. There's your absorption. I know it's hard to see here because it chopped around a little bit after, but there's your trade, 20 ticks. There it is again, more divergence. You got to be careful if you're trading these multiple times, but I'm just using this to show you how active you can be as a trader and still make money. Now, here's the thing about this one. We've got absorption at the highs. We're kind of coming into a level here, but we don't have divergence. So I would steer clear of this because of this. Do you see how much noise is coming in at the highs here? It too noisy is not good for me. The same thing here. I don't like this because to me that's too noisy. I want it somewhere between a little noisy, but not too much. And these are a little too noisy for me personally. But if I'm going to take an order here, I want to see the divergence because of that noise. And so there you have it. There's noise, but we have divergence and it's at an AOI. Sure, why not? Go for it.
Yeah. So Jim, what I'm going to do is I'm going to leave the rest of your examples for tomorrow's AMA.
Cool.
And what I want to do is I want to, we still got about a half an hour till the close. Yeah. So let me kind of go in and share my screen for a second. And I want to kind of take somebody through a start to finish process. Before I can do anything of you know, strong merit, can somebody just do me a favor and give me one market, any market that's in futures? Give me the S&P. Okay, got a couple people on the S&P. So perfect. So the S&P. So what I'm going to do is I'm going to pull up. I have fractals that are set for the S&P, and I'm going to use a 3-minute candle. Okay, I'm going to remove some of the noise, and I'm going to use a 3-minute candle. So I'm going to set a Renko chart for 15. Okay, I'm going to just start from scratch. So let's just take a Renko chart. Give me a second here. 1 second here. Bear with me here, guys. And of course, getting hammered. So we're going to go in here and we're going to go to the S&P. And we're going to just pull up a Renko chart for a second. I'm going to start from scratch, and I'm going to load a 15 tick bar. It's a little bit bigger than most people are, but I'm going to use a concept. Okay. We're going to reversal size of 30, and we're going to use an 8 of an offset. Okay. So I'm going to load bars. Okay. I'm going to load bars, and let's just say we want to load, say, 100 bars. Okay. Now I'm going to engage tick replay. Okay. Now, it's not a lot of bars. So we might be able to add a few more bars if you want. You go into, say, 250 bars. Let's just add a little bit of bars. Okay, let's see if we get a few more bars. Okay, there we got some movement. Okay, and that's pretty much today's session. Yeah, that's pretty much, that's the overnight session. So now what I'm going to do is I'm going to go into the indicator. I just want to show you a step-by-step process. Okay, we're going to add the MMTT. Okay, now I don't know what the block trades are going to be or what the absorptions are going to be. So what we're going to do is, here it says minimum contracts 40. I know that that's just way too small for the S&P as a baseline. So I'm just going to set it at like 500 for a second and put this at like 50. Now I might have to go in and adjust that, which is fine, but I just don't want it to, I just don't want to like have to wait for all the different noise. And I'm just going to, you know, basically, and we're going to put bars back of like, let's say 50 bars. Okay. Now we might be able to use 25 bars because it's a slightly bigger time frame. Okay. So I was going to load this up. We'll give it a second because I'm loading a fair amount more bars, and I do have tick replay for the purpose of doing a back test on the day. If you're loading this in real time, you don't need to load tick replay. See how long it's taking when you load tick replay over an entire day? It's got to go in and check every single order and block and scrub the tape. You don't do this in real time. This is meant for testing. This is meant for visual back testing. This is meant for all of that stuff. Okay. And we're going to give it a second to load because it's going to take some time. And this is not meant for trading. This is meant for visualization. Okay. Now, while we're getting this to load, okay, how many of you guys, well, while we're getting it to load, why don't we do this? We'll run the poll. How many of you guys are interested in a free license of the software? I'm going to run this poll, okay, right now. And I'm going to get you to choose yes or no. So give me a second, guys. We're going to run this together. So just fill out the poll, put in a yes or no, or maybe so. You see how long it takes to load tick replay on a large look back? It's a lot of data. It's the S&P. It's got to cache a lot of data, right? This is why I'm doing this on purpose, to demonstrate, right, the fact of the difference between loading true bid and ask data versus using real-time information, right? And I might have set it a little bit too large, and I might want to go back and set it a little bit less, and it's looking at 100 bars. So it's, we'll give it a second, but. So we're gonna wait. We've got a lot of people wanting a free license. We're gonna give you guys a little bit of time here. There it is. Okay. So I kind of want to talk a little bit about just some things that you're seeing on the chart. Okay. So okay, let me just do this. So we're going to end the poll now. Okay. Perfect. Everybody who gave a chance to win, we'll get in touch with you. Okay. And we'll definitely get you squared away. Okay. So now I've got the S&P and it's a big time for it. Okay. So a couple of things that I want to do is I want to kind of look at key areas, just any key area that had data coming in to a significant point. I just want to kind of drive something home here. Now, I just want to kind of talk a little bit on this push to the upside. You can see we've got, well, I think it's really important that you understand which side the blocks are on. Okay, so if you're looking at price going up here like this, I'll just kind of explain that this order is on the right side of your candle. So when you have your candle like this, bid and ask goes like this. Okay, anything on this side of the candle equals buyers. Anything on this side of the candle equals sellers. Okay. Buyers are going to go to the ask. Sellers are going to come to the bid. Does everybody understand that? Order flow 101. For those of you that don't know that, rest assured, come into NeuroStreet, come into ARC. We'll get you squared away on order flow basics. But if we're punching through here and you see that this is a key area of resistance and the market trades up, we got a block trade. Okay, we got another block trade on the left-hand side. That's a seller. And then all of a sudden, we got a block trade and a big level of absorption on the right side of the candle. Another big level of absorption and a block trade. What happens? Candle closes. They come back down to retest that information. You notice how it doesn't, do you notice how it doesn't clear much? Like it doesn't trade through it very much. Okay. Now I want you to pay attention to this. If I know that I've got significant, seems to only wick through those blocks. Yeah, not very much. So I'll give you an example. If I know that this Renko is a 15 tick bar, so the average true range is 15 ticks. So let's just draw a little bit of a, let's just take a look at the ruler on this. 15 ticks. That's 16 ticks, okay? So we can just say, I'll just put a ruler in here and we'll go like this. That's 18 ticks. Okay. I just want to measure the stop size so that you guys can see where I'm going with this, okay? So I'm going to draw a little line across this and just kind of, I just like to teach this way so that you can understand that I'm going to put a little level like that. And that's going to be and we're going to just fill it. Opacity. I don't even know if I'm able to do that. Maybe it doesn't let me change the color. So let's just go back and just leave it like that. So that is, I'm going to change it to a different color, guys. I'm just going to do it like this. Okay, that's the area that I'm interested in buying, right? Why would I be interested in buying that? If I was coming this way and I've said I got a big block order like this, I would look at setting it up like this. That would be the area I'm looking to buy. Maybe we need a version 2, Ingrid. Price comes down and it tags the area, okay? Do you notice how I have a line of absorption on the right-hand side? I'm not really interested. See how this arrow or this diamond is on the left-hand side? That's sellers. I'm not interested in buying in there, right? Okay. Now, what do you see here? Do you see what's happening at the highs here? Now, I'm not trying to teach you how to sell into that. That's just sellers. And then you get the flip. Do you notice how the flip comes one bar after all those sell orders are in there? That's what order flow is telling you, is that this is going to tell you. Now, we've already traded this. This has already been used up. We can't use that. That's garbage. But we never did trade back into anything. You can see that there was some buyers trying to get involved here, and there was some sellers meeting them, and you can see that. Watch what happens in here. Right here. This is why I love the combination. And if you really want to practice with this, like this one was easy to see. This one was super, super easy to see. But if, let's say, we're coming down bar by bar like this, isn't that the exact same thing that I'm teaching over here? I have a bunch of sell diamonds met with sell absorption. Isn't that the exact same combination? Absolutely. Same thing here, sell diamond. So maybe what we could do is we could ultimately say, well, let's wrap a zone around this to this, because this is a good area of selling. And let's just say, okay, let's just put, it's a good area of selling right there. Price comes back in to test it, trades into that, and then done. Actually, that might not have even traded up into that, because the way that the Renkos close, it's modified offset. So it'll be interesting to see if price ever came back up to test that and how well it reacts to this. Oh, there was the wick. So it did trade up into that. You can see that the wick did trade up into that. You got a bar like this. Lisa, I'm going to teach this to you. Diamonds over here are sellers. Diamonds over here are buyers. Buyers are going to the bid. Sorry, buyers are going to the ask. Sellers are coming to the bid. So right here, you see this wick. They came up and they filled that absorption. Okay. So I'm trying to break this down even a little bit slower. Okay. I would not trade that a second time. It was already absorbed. So let's just continue up. Take a look at this. Right here, you got some buyers coming in with the tape. Take a look. Actually, excuse me, that's not buyers, that's sellers. So I would not take that. That was my mistake, guys. I'm human. I am human. Take a look here. Sellers, absorption. See it? So I would wait, right? And we might be able to have an update too of the software after it's in the hands of everybody. We might be able to turn buys off, sells off. If we have any feature requests, definitely we can do that. I mean, this is just version 1, getting it out and trading with it. But what I'll do here is I'll just kind of show you, this would be the area I'd be looking to sell. There was the uptick. There was the drop. So you have an immediate opportunity as the market's happening to trade the most recent data. 446 worked. Yes, absolutely. So let's just keep going by and just finding every opportunity. So you see here, this is a sell with a bunch of absorption. I can see the buy side. We could turn the buys off in the coloring. There's the uptick. There's the drop, right? Like I'm just looking at this candle. What does this candle tell us? Sell orders met with tons of sell absorption. This is a selling bar. Could you enter here? Absolutely. Let's just go bar by bar and just find an example. Let's just wait. No absorption. Let's wait for it. Wait for it. Okay. It's never too little to trade on. It just depends on the context. Okay, take a look at this. Sell block met with massive absorption right here. Now, I've never traded this market on this time frame using this. Okay. There's the uptick. I mean, there it is. Guys, this is how you could literally go bar by bar and trade every diamond in the rough trade, just looking at. Okay. Now we're in a buy area. We're not going to go down here and sell anything right now, but let's take a look. We got buyers coming in. This is all sellers on the side of the candle. The diamonds are on the wrong side of the candle. Not here though. Take a look at this candle right here. Boom. Okay. And so what we're going to do is I'm going to teach you this, guys, in the AMA. Okay. Take a look. Buyers and absorption. Diamond in the rough trade. I'm just waiting for a candle that gives me confirmation between the two together. Wait for it right there. No. Let's take a look here. Yeah. So this is one. There it is. So if, yeah, you can change the color of everything, guys. Just please bear with us. This is just an event for presentation purposes. We got a diamond and we got absorption. So if the market comes up to tag that, it'd be interesting to see if it even came back up there. It didn't come back up to that level yet. Now, so you guys get the picture. I could go through this every day. I could go through this bar by bar, right? I could go through this every single trade. You know, we can do that till the cows come home. But I really like, right? Right? Like, take a look at this. Like this, to me, I would be a little cautious on because this is one tick in front of the level. I always like to front run. Okay. And guys, if there's a better way to draw the numbers and the diamonds and colors, set it up the way you choose, guys. Set it up the way you choose, right? Like it's you have color to be able to do that, right? And but here's the key, guys. You cannot just take order flow and just go put it on without understanding this. If you have your software set up incorrectly, you're not going to be reading true absorption or block sizes coming into the market. Like that's the fundamental edge to this, okay? The strategy is taking that fundamental edge, combining it with technicals so that you understand how to use it, okay? Now, can you guys give me a yes if you learned something from today's presentation? It's one thing to take software, but you need to understand if you learn something. Like that's the key. Now, I don't expect everybody to understand it right away. And if it's complicated, it's because you're not keeping an open mind. You have to learn something, right? Like losing weight is complicated. It means you need to put the fork down and be more disciplined, right? Right? Trading is not an easy business. This can be easy once you understand how to use it. And if you don't like the colors, change the colors. If you want to change the size of things, the fonts, absolutely. Okay. We will be training you on how to understand this. Okay. Take the zones on, take the zones off. Pause the tape, pause it off, whatever you choose to do. All I'm saying is that you need to know how to see what the big guys are doing, or else it's not going to make sense to you. Okay. A great example would be this. A great example would be coming in off the lows, right? If I take a look at this candle right here, to the untrained eye, which is what we're going to teach you how to train your eye. Let's take a look at this candle. You got buy absorption here, but you got sell block orders on that candle. That's not an opportunity. That's just noise. And we might have a better way to display this with some feedback on the software, because it might just be a graphics thing. We might be able to find a way to displace it. But what we'll do is I'll just kind of give you an example of every bar tells a story. Every bar tells a story. Right here. That's sell block orders, but no absorption. That's nothing. That's nothing. That's nothing. There's some buy block orders, but nothing's going on. Like, let's just go over here for a second. Bar by bar. This candle, okay, has buy absorption coming in, but sell block trades. Yeah, you could definitely color code the, right? Right there. Now, I like to not just use Renkos. I like to use other time frames. I like to look at everything else. All you need to learn, you got a candle. If it's blue levels or black levels over here, or if the levels are generating from here, okay, these are sells, these are buys. If the diamonds are over here, these are sells. If the diamonds over here, these are buys. Anything coming from the left side is sellers. Anything coming from the right side is buyers. Simple, super simple. And all you need to do is change the displacement. You can change the displacement of your candles. You can change the size of things if you choose to. It's really a Ninja Trader. It's a Ninja Trader graphics thing. It has nothing to do with the way we code it. It has to do with Ninja Trader and how you set your bar settings and your colors. That's all preference. But I'm here to teach strategy and efficiency. Okay. So what I'm going to do, I'm going to close this out. Okay. And while we go into this, let me just pull up the PowerPoint. We've already done the free license. Okay. Let's go through all the way to the end. Let's just get out of that and let's just go from. Want to get into the offer, guys, and talk a little bit about price. This is sophisticated tool sets. Like they give this to a long time to develop because we had to build the algorithms to be able to scrape the tape. And it's not uptick, downtick. This is bid-ask data. So I've been in this business close to 10 years, and I'll tell you right now that every other order flow software out there is using uptick, downtick. Uptick, downtick is not bid and ask. It's close, but it's not bid and ask. This is bid and ask. Okay. In order to look at historical data, you need tick, replay, engaged. Real-time trading doesn't require it, but this is serious order flow concepts. Okay. Now, I don't expect you to understand everything in one event, but I do think that if you're serious about order flow and you're serious about taking key information that is not available to the masses, you can't see this normally. Okay. You can't see this normally. This is a tool for you to be able to do that. Okay. Now you can use this with any software. You can use this with a standalone system. You can use this with other tools, but you're definitely going to need a little hand holding, which is what we're going to do. And we're going to spend a lot of time in the AMA. You'll have access to the training videos and the software user guides, our support team, you name it. We can help you install it, all of that fun stuff. Okay. So what I'm going to do is I'm going to run a poll. And I just want to know if there's, where you're at. If you'd like some questions, if you have some questions, we could definitely help you. If you're ready to buy, let us know, because I want to know how many people are going to be in the AMA that we're going to need to help and service this. If you're using order flow software, there is nothing that's going to trump the accuracy of this information. If you're an order flow trader, nothing you have is going to trump the accuracy of what we're doing. We spent months on the engine for the algo, months. Right? Months on that to be able to make sure that we could scrape the bid and ask data properly. Okay. And we're going to give you 50% off the price. Don't come to us later and saying, well, can you still get the deal? Help me out. Like, guys, this took a long time to get ready, and it's for order flow traders, right? And if you're looking at timing your market, you're looking at getting in with a huge advantage with blocks. And take the diamond in the rough trade, man. I can assure you, it'll just scream at you. It'll scream at you. Yeah. Okay. So will you help with the install? Yeah, Bradley, our team will definitely help with the install. It's not a problem. Absolutely. Yeah. Bree, we're definitely doing a webinar for sure. Okay. So I'm going to go through some questions, and Jim's here as well. And Jim's going to be running the AMA tomorrow. No, this is only futures, guys. This doesn't work for Forex. Yeah. Sorry, Bradley. It only works in futures. Yeah. Yeah. So for those of you that have questions, it says, please have Jim reach out to me. If you want to ask your question here, there is no annual fee. You can just purchase it, TJ. Yeah, it's a one-time purchase. Yeah. So if you want to use this, you own it. You buy it, you own it. It's yours. Okay. No, this is an ARC product, Richard. Yeah, this is an ARC product. Yeah, this is not NeuroStreets. Yeah. So you own it. Yeah. It has nothing to do with the NeuroStreet software. The price is available till Friday. Yeah. It would be effective as you said it, John. So John's asking a good question. I wonder how effective it would be on bonds. It'll be as effective as it's supposed to be on any market as long as you set the settings. You need to set the settings based off what the market's telling you. And our software will tell you what to set the settings. Yeah, you do need Ninja. It's a Ninja Trader product. Yeah, you need to definitely use it. Yeah, we don't do any free trials. Yeah, it's not, this is it's not a trial software. Yeah, you have to own it. Yeah. Ninja Trader 8. Yeah. Yeah, so great question, Steve. If you own other products, how could you use it in combination? Honestly, it's a preference. If you're somebody that is looking at being more accurate with your areas, great example is, let's say you're a trend line trader or you're a low volume node trader. Having somebody come in and use this tool on their workspace, like let's say you're trading LVNs, breakouts. What would really be solid is the breakouts that you're seeing in Gilbert's room. Ultimately, if you get follow through on the breakouts with big absorption and block trades coming in, you'd better be jumping into that trade, man. Like that's like, if you've ever guessed, oh my God, I hope the breakout works. This will tell you if the breakout's going to give you the follow through or if it's just a stop run. Like, especially for breakout trades. In fact, breakout trades, if you're trading breakouts at all in any of the trade rooms with NeuroStreet and Gilbert or any of those setups, this will tell you if the breakout's going to rocket or not. If you're trading trend line breaks or if you're trading any of the tools like LVNs, if you line those levels up with diamonds and absorption, I'm an emotional trader. So I'm going to share with you my own personal journey. I am 110% emotional trader. In fact, I don't talk about it that much, but because I talk to myself while I trade, so I calm my emotions down. But I need to have confirmation. So I always find myself testing.
Still there, Sean? Did everybody else lose audio?
Yeah, I can't hear him either. We lost you, Sean.
Lost him for a second there, guys.
It's getting deep there for a moment, then we lost him.
he started talking about his feelings. That's why his
Yeah.
internet stopped working.
Yeah, cut him out. Just give us a sec, guys. He'll probably just reboot and come back on. So let's give it a few moments.
I think I got kicked out. Yeah, I got
Yes,
kicked out.
Bradley, this is Ashley. Nice to see you.
Hey guys, sorry, I got kicked out of there. Internet.
Yeah.
Can you guys hear me?
Yep.
Yeah, sure.
Yeah,
can,
so I'll end with this is that, this gives you the information to be able to not be afraid so much of the levels. I guess that would really help. Like if you're somebody that, you have areas of interest, you're a breakout trader, it gives you the confidence, Bradley, to be able to step in without so much fear. Yeah. And I think it's a really solid way of putting it, right? It's a really, really solid way of putting it. Right. So guys, I hope you enjoyed the event. I hope you guys learned something. Tomorrow we're going to be doing an AMA. Jim's going to be doing that. He's going to be streamlining it. He may even be trading with you depending on the setups that present themselves at the time. 50% off, guys. If you're interested, Johnny on it. And if you have questions, let us know. Guys, have a fantastic day. And look forward to seeing you guys in the AMA. Yeah, take care, guys.